Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, December 18th, 2020. As always, please don't forget to hit the like button, subscribe to this channel, and share this video. So again, stocks are at all-time record highs, and of course, if you're reading the news, they are quite bad, even though there is a vaccine that's being distributed. So never mind the news, stocks are doing their own thing. All of the major sectors, S&P, Nasdaq, and small caps are again at all-time record highs. We'll give a couple of examples. I call them the breakout trades. I think I already mentioned this one, PagerDuty, and I don't remember if I mentioned Revolve Group. I have both of the stocks myself right now. Treasury yield is getting close to bullish levels, and we will look how it will affect the prices of bonds of all sorts, but treasury bonds specifically. And dollar again hit a new low, but gold barely moved, so I'm still having doubts about this gold trade. And again, I'm okay missing a trade, but I'm not okay, having a trade go from a positive to a negative. So I'll show you what I mean there. And Bitcoin moved to new all-time records, so congratulations if you're still holding Bitcoin. Okay, so S&P 500. This is S&P 500 in mini futures. This again, new all-time record highs, and this is despite news like this, with funeral homes basically running out of space, and these are refrigerated morgues. So storage for dead bodies. Here I live in California, and we're completely overwhelmed here. Basically, the best I can say is that just don't go out and just take it really serious until the vaccine is available in your place. So do just take care of yourself for now. All right, so news matter very little. I keep saying the same thing basically. You back in March, back in February, we didn't need to know anything about the news because we already saw everything on the chart. So my clients hopefully acted on my alert here. My alert was on 25th of February, and here this collapse, we basically saved ourselves a huge trouble because I didn't know it was going to go up afterwards. We don't know that after such a big collapse, we won't see a little bounce and then continuation lower. This happened on many occasions. It's called a bear market. In this case, because of the action of Federal Reserve and because of other of Treasury, basically we did not see a bear market. But if we could have just as easily have a bear market. And again, for me, it makes very little difference because we can make money both when the stocks are going up, and we can make, if not more money, when the stocks are going down. When the stocks are going down, there is more suffering for real people in the real economy, etc., like this. So people don't like things going down, stock market going down, because it produces suffering. People like when stocks are going up because it reduces suffering. So for me, again, it matters very little, even though it sounds very calloused. But if we do nothing and we just look at the stocks, at the chart itself, we can make money on the chart itself without knowing anything about how these lines and how these numbers affect people. So this is called technical trading. In technical trading, we don't really worry about outside events. We simply look at the charts. I am 100% a technical trader, and in fact, I don't even use things like volume. I only use things like price. And on this chart, we can see several lines. So we have the green, blue, red, and yellow lines. So these lines are my indicators called Master Charts Trading Price Action Indicators. What do they show? They show support and resistance. they also show where to exit. So for example, back here in February, we exited not because of the virus, not because I knew something that people didn't know, like for example, about the future and about some kind of a, what do you call those things? Insider trading information. I know nothing of that nature. All I know is I know how to look at this chart. And here on 28th of February, I saw that it was, this is my trigger. If we had an entry from back in February 2019, then the time to exit was right there, and it's pretty clear. You don't have to. I don't have to show it to you. You will understand yourself right there. And then we just basically did nothing. I decided not to sell it, not to short the market back on 27th of March. Again, because of the way Federal Reserve was preparing to act, and I saw also junk bonds, the way they acted. So here's junk bonds. Junk bonds actually broke out a little bit earlier than S&P. They broke out on the 9th of April, while S&P broke out on the 29th of April. So multiple decisions of why not to sell it, why not to short it back here on the 27th of March, even though the trigger was there. So we bought S&P, we started buying it back in April, and we've just sat in the position. We sit in the position, we're doing nothing until now, basically. Because we're trailing, where are we trailing? We're trailing at the blue line. So notice how far away from the price action this line is. So we're still, fully invested, basically. Yes, sometime in the future there will be a drop. We don't know when. People are predicting all kinds of things. Economic collapse. There is insecurity, social unrest, etc. And it will happen eventually. We just don't know when. And looking at the chart itself right now, I just don't see it. Here again, back in February of this year, 2020, I saw it clearly, and even you can see it if you haven't practiced anything with the indicators. It's pretty obvious here. But right now the picture is different. I don't see the same action. I see quite the opposite. I see S&P making new highs, new record highs. So we're pushing higher and higher and higher, despite all of the news, despite all of the negative and narrative and the suffering of people, which is horrendous. Because this COVID thing, you may ignore it, you may not like it, but even if you do get sick and you get positive, and what I'm hearing, there is organ damage. In addition to you being sick a little bit, you can have, vascular system damage. You can have liver, kidney damage. You can have, arms, legs amputated because of the clots. You can have a stroke, etc. So it's not just like a flu or a cold. It's a different virus. It really is a really weird and nasty thing, and I urge everybody to just wait until you have the vaccine, and then afterwards start cautiously venturing out. But for now, it's just not the time. Now is the time we can look at the chart from we're sitting at home, we're looking at the chart, and we're trading the chart. We're not really trading the news or the events. All right, so stay safe in the sense of you will have future to trade. Right now, we just need to just chill and wait. Nasdaq, QQQ. So again, new all-time record highs. we did the same thing. Here's Nasdaq. I'm gonna zoom back out. We exited back here, the same thing. We re-entered, and actually this is a purple arrow. I did not re-enter it. The system said buy, but S&P was collapsing, so I'm like, no way, I'm not gonna buy in here. I was absolutely correct back in March to just wait it out. And then notice on the 14th of April we were breaking out here. So huge move, 40% move, 46% move to now. So again, if you bought it back in April, then you're you should be just trailing it higher, but trail it far away from the action. Don't trail it close to the price action, otherwise you'll get stopped out. Here small caps. The chart looks a little bit different, but overall, pretty similar. There's the collapse back from February. And then we started buying it. There are the opportunities. You can see there clearly. You don't have to be a nuclear scientist. You just put the lines, put my indicators on your chart, and just start trading. It's super simple. Latest alert was just incredible. I mean, look how nicely it came down to the line. It touched the blue line, bottomed out there exactly, and then rallied. And if you are still open, you got 37% move. You could be taking profits, but I think in vast majority I would be trailing still significantly lower. Okay, and a few trades that I did. Actually, this is still open position. This company is called PagerDuty. Only later on, after I opened it, I realized it was an electronics company or some sort of communication company. But up until then, it came up on our scanner. Now I'm able to scan the universe of stocks and find the ones that are closing above my lines or closing below my lines. So this is very convenient, and you can actually have the same thing if you sign up. My alert, or this is an actual alert back in 23rd October. I bought myself on the 4th of November, right there, $29.10. And it was just almost immediately went in my favor. There's my first target, sold a quarter there, advanced my stop to entry. See, at this point I cannot lose. This is my favorite maneuver. We enter, we advance, we wait for the target, we sell some partial, but you don't have to do it if you don't want to sell partial. You can just advance your stop. So at this point there is no way you can lose, and that's very important psychologically. The stock actually just continued higher. It just keeps going still, so it's at 60% plus right now. I think somewhere along the way I sold another quarter here. I for some reason didn't mark, but I may take some profits, but it looks good, to continue. And I'm trailing at the blue line itself, currently at 33.73. So that's one example. Why did I even decide to choose this particular stock? So I was looking mostly at the narrowing of a trading range, and lately I've been just almost exclusively trading this breakout trades. So you can see how far the lines are here. For example, in June, between the yellow and the green line, look how far the distance is. And then you can clearly see they're started to narrow. And then right there in end of July, we see a breakout. In other words, a close above the support resistance blue line. And also what's nice is that the distance between the lines is very narrow, so our stop is relatively close. Our stop would be at the yellow line. I think it came up on our scanner a little bit later, so I got interested back in October, and then we just went ahead and bought it. I sent an alert to my subscribers as well. So overall, this is the reason why I took this trade, is because of the narrowing of a trading range, and it's a breakout stock. So breakout meaning that it hasn't yet been above the support resistance blue line, and it's just like a first time or a first time in a while that it's coming up from below the yellow, so below the 52-week lows here. Very similar pattern, Revolve Group. In fact, look how similar they are. So Revolve Group, again, I still don't know what they do. I need to look it up. But the important thing is look how far apart the lines were. So the trading range was huge, enormous here. Then the lines began to narrow, and the price came up and closed above it, the support resistance line here on the 12th of August. And this was our trigger. A little bit later on, I think it was a second, the price even came down even more, so it was just a perfect price. I went ahead and I bought myself here on the 5th of November. you know, it touched the blue line, touched my support resistance line, and then closed above it, and that's all I need to know. So I went ahead and I bought it here. Again, almost immediately, actually next 3 days, it went in my favor. I advanced my stop to entry, and I sold a quarter of my position here. So again, at this point, you know, just 3 days after the trade was entered, I couldn't lose. And so I'm basically sitting in my position, and it started going even further my way. And I'm just advancing my stop at the blue line, where I have the current stop is at the blue line. Went ahead and I sold another quarter here a few days later. But overall, look at this nice move, 61% move in our favor. So again, you know, it's one of those just beautiful, simple trades, and that they go in your favor sometimes really fast. Sometimes they take a while, and especially if you have options, then so you need to think how far out you're going to be buying them, because you don't want to be buying them too close, because sometimes they expire before they go to target. But in this case, they just immediately went in our favor. So I'm still sitting on half my position and advancing my stop. So this is the type of breakout trades I like. Okay, so let's look at treasuries. This are treasury bonds, TLT. I still have a position. I bought it back on 10th of September. My target hasn't been reached yet, and I'm still, you know, just holding it. It really hasn't moved anywhere. Now bearish levels are not far off. For treasuries, I usually look at the for treasuries, I usually look at the bearish levels at the red line versus the yellow line for stocks. Looking at the treasury bond yield, I already showed this chart several times. So notice how they're curving down, and we're getting very close to this indicators that are curving down. So that means that the price has less distance to travel towards bullish levels for the yield. So this is the treasury bond yield, TYX. TYX and TLT, this is TYX, this is TLT, they move the opposite direction. So if TLT goes down, TYX goes up. So what is happening here is that, again, we're approaching this bearish levels, bullish levels for treasury bond yield, but by extension bearish levels for treasury bond price. So once or when or if, again, the price for TYX closes above the blue line, the support resistance line, this could happen actually quite soon. I will exit my TLT position and most likely enter on the short side. Maybe I'll buy puts on TLT. For now, let's wait and see, but this is quite ominous, and this could signal an end to the bull market for treasury and bonds in general. And dollar index, so DXY, if you can trade it, then you can have them as a contract for difference, CFD. In the United States, we can't trade it, so I'm just showing it for information purposes. But if you listen to my previous videos, I thought that this was a kind of like a bottoming pattern, and obviously I was wrong because it went to new lows. This is bearish, obviously, and the other thing is I do trade gold, and I do look at gold quite significantly, quite often. So, you know, bearish, really so completely collapsed dollar. Shouldn't gold be, you know, more powering higher from here? And, you know, I don't know, it just doesn't feel like it's a strong enough move. So I am kind of reluctant, honestly, to just to go into the gold market right now. You know, there's this good saying, when in doubt, stay out. And this is one of those things when I'm just not feeling this trade. And plus, I have so many other trades. You know, if you really want to trade gold, then, you know, maybe buy it here at like 1856 or something. But I just don't like the setup. You know, the way the dollar is at the very end of the line here, it could easily just rally a little bit and gold could collapse. So I keep saying the same thing, it's not collapsing. We'll see where it goes, but once again, this is another thing for traders out there, is people just sometimes they just must trade something. No, you don't need to do that. You can just, okay, I don't like this pattern, I'm not gonna trade it. So this is what I'm thinking. I just don't like this pattern, so I'm not gonna trade it right now. Finally, Bitcoin. So Bitcoin, congratulations again if you're holding it still. My latest opportunity, my latest alert was back in May. Alert was sent, I bought myself, but I got stopped out a few days later, so now I'm like, wow, great, I got stopped out. But you know, this is how cryptocurrencies move sometimes. You know, if you caught this move, congratulations. I caught some of this move using Ethereum. They're pretty similar. It's a little bit overextended, obviously. I mean, this is a vertical advance, basically. But it is bullish, you know, it's very strong. There is demand for Bitcoin. So, again, congratulations if you opened. And that's best I can say. Alright, that's it for this week's recap. So as you can see, you can go to masterchartstrading.com. You can also go to everyonecantrade.com. So I was promising that I'm gonna raise the prices. I did raise the prices. So now the indicators are $49.95 per month. But what's nice is that you have a stock screener. It's included in all the plans. So you can get this indicator lines, but also you can get the screener, which will look for stock opportunities similar to, for example, PagerDuty. So it will scan the stock universe and find opportunities like that. So those are the trading indicators that you can see on this chart: green, blue, red, and yellow lines, which you can trade yourself. Again, very easy setup, and you only need a free TradingView account. Okay, the next one is I have the newsletters, and I have two actually, and they're part of they're the same package, but they are within. They have the two different blogs basically. One is the Elite and one is Stock Speculator. So the Elite blog lists all of the various alerts I have on the stocks, or rather on common ETFs, on various common stocks like large cap stocks, forex, commodities, gold, and cryptocurrencies. So that's one of the newsletter. And then lately, I launched a new newsletter which is called Stock Speculator. So this is the type of breakouts we're getting. Things like PagerDuty, things like NEO. NEO actually was a while back. This is when I decided to launch this new blog. So this is the type of breakouts we're looking for in the Stock Speculator newsletter. So this one is $100. I think it's a very good opportunity. It's per month. I think it's a very good opportunity to get really large moves. So again, for PagerDuty, for example, if you're bought an option here, usually it's a 3 times the move. So this could almost probably like 200% or if not more, honestly. I mean, this is a huge move. And then finally, I think the best deal obviously is the Ultimate Bundle, because you get both the indicators and the newsletters, and I think it's a steal at this price at $129 per month. So do consider signing up. Alright, that's it for this week's recap. Again, if you have any questions, please let me know. Thanks for watching and have another great trading week. Bye bye.